Hello to those joining. We're going to get started in a minute or so.
Is that a Picasso you got behind you, Ryan?
Sorry, Tom?
Is that a Picasso you got behind you?
No, I picked it up at a market in Bethnal Green, actually. Not nearly as expensive. I'm pleased to report. Just give it another 30 seconds or so. Won't keep the audience waiting too long. Cool. Yeah, I think it's time to get cracking. So I'd just like to thank everyone for joining. I think this is the fourth in our series of Yapily masterclasses. This session is very focused around open banking payments. So I'm delighted to have Simone from Volume and Tom from Comma joining me for this one today. So just, I guess, to quickly go over the ground rules for the session. So everyone will be muted. So if you have any questions, please do add them to the Q&A box. We should have time at the end to go through as many questions as possible. And this session is being recorded, so it will be shared with you after. Look, without further ado, I'll hand over to Simone and Tom just for a quick introduction. And then likewise, I'll give a quick intro and an intro to Yapily. Simone, why don't we start with you?
Thank you, Ryan. It's a great pleasure being here, and looking forward to chat a bit the hot topic that are on the open banking payments today. Quickly about me, I'm the founder and CEO at Volume. We are the only one-click checkout solution that runs on open banking rails.
Fab.
Great. So my name's Tom. So I am the founder of Comma. So Comma specialises in open banking bulk payments. So you can imagine for every payment into a business or to a person, there's an equivalent payment out. So whereas many companies focus on payments in, Comma focuses on payments out.
Brill. Yeah, quick introduction to me for everyone. So I am the platform lead for payment integrations at Yapily. So my role focuses on access and connecting the banks to our wonderful customers like Volume and Comma. So Yapily is Europe's leading provider of open banking infrastructure. We are an API first platform, so what we look to do is to sort of silently power our customers' applications and products. And the job that we're here to do is sort of fundamentally to solve the problem of access, and give our customers a platform to compete with incumbents, whether it's on the data side, or in this case on the payment side. So yeah, as mentioned, the focus of this session is open banking payments 101. So I guess what we're going to try and do and try and share with you guys is an understanding of the current challenges in the payments landscape and how open banking can help to solve those problems. Hopefully Simone and Tom will share with you guys some real use cases for open banking right here in the present day. And then we're hopefully going to dive into some specifics around bulk payments and variable recurring payments, which are two sort of specific aspects of the set of open banking APIs that those guys are particularly invested in. And if there's still time after all that, then we might start to look at sort of 2023, what that looks like for open banking payments, challenges, predictions, and how to drive further customer adoption. So I guess like the first topic we want to sort of talk through is problems and challenges in the existing payments landscape. So I guess like Tom, from your perspective, and with your customers, what do you see as the problems and the challenges with payments and getting paid in 2023?
Sure. So there's many areas to this. So let's start with the banks themselves. So traditionally, the approach by banks to reduce risk and fraud and errors has been, in essence, to slow customers down, to make them go through a process of checking and verifying and double checking and clicking, like, are you sure about this payment, screens after screen. And the main reason that that's there is that, well, payments have been traditionally made manually. And so if they're made manually, then you have to put a lot of extra steps in order to do that process. So there's lots of limits and fail-safes that the banks put in practice to make that process safe, in quotes. But to be honest, the very best way to reduce error and fraud is to remove that manual process. And by eliminating the possibility of entering invalid payments or entering payments to the wrong person, then you can reduce all sorts of things and speed up the process immensely. And if you look at kind of scale of this problem, if you look at just salaries alone, where people are paid each month, traditionally there's been this split between payments that are made using the faster payments network and payments that are made using BACS. Problem with BACS is that it's not accessible to most small businesses. It's a credit facility. It's often put in the hands of bureaus or larger businesses. So most small businesses are entering in salary payments manually. And if you look at the scale of this, it's close to half of all the salary payments made are done manually through banking interfaces. That's a huge number of people that are each month clicking into their bank, entering in payments one by one. And then if you look at the scale of the accounts payable space, where you look at the frequency being a 5x times more, there's a massive amount of manual payments going on, and the effect of that is that it slows the movement of money down through the whole process. I think really with the rise of card payments and one-click purchasing on Amazon, etc., there's expectation that you can always make that work with business payments. And of course, there's a problem with that, and that the larger the payments, the more the fees kick in. And there are certain cases, for example, salary payments, where no staff member is going to accept a card fee to get paid. So it pushes people back into that manual bank transfer process. So there's a real mismatch between expectation and what's actually happening in reality.
It's interesting. So I guess a couple of things touched upon there. Automation, how to automate business payments at scale, but also speed and access to the underlying systems that power business payments at the moment. Simone, I guess on the themes of automation and of speed, like what do you see as the challenges for your customers and in your sort of e-commerce sphere in the present day?
Yeah, no, thank you, Ryan. That's a good question. There are two angles there. There are different problems. If we look through the lens of an e-commerce business or any sort of service business, most of these guys have expensive high fees associated to credit and debit card. Tom mentioned about this, and we completely resonate with that challenge in the industry. The second, it's around speed. A traditional e-commerce business that use one of the traditional acquiring banks, they can wait between 2, 3, 7, in the worst case 14 days to actually receive the money from their customers. And last but not least, obviously there is the security and the risk associated to chargebacks. So from a business angle, I would summarize with these three big problems that we're seeing. The interesting part is that if we look at the challenges from a consumer perspective, most of the consumers are still really not aware of open banking. for a variety of reasons. And the big one that is worth mentioning is about consumer adoption. So how do we bring open banking that has been so far great for businesses at scale among consumers? I think these are the big problems that we're seeing at the moment from these two different angles, consumer and businesses.
I think one of the things that both of you touched upon there was just around fees, and I wonder if we could maybe just drill into that a little bit deeper. Tom, from your perspective, how do you assess and compare the costs of the more traditional ways of making payments for your respective businesses versus the open banking alternative?
Well, there's kind of two angles to this. So there's if you compare it to cards, well, with cards, essentially the person receiving money pays generally. So if your person you're paying doesn't offer the choice of paying by card, then you're kind of stuck. There are some systems out there that allow you to initiate payments by card for payables, but then you're picking up the fees as the purchaser. And it ranges from 1% up to 4% in some of the worst cases. And if you scale that up to larger numbers, that could be quite significant amounts of money. And which essentially pushes people back into those manual processes to avoid fees or to simply pay suppliers that don't want to accept cards. Then there's the other side as well, where if you do want to automate payments, it's then traditionally going through a back service. Now, once BACS is set up, it can actually be quite inexpensive, but the setup process and getting on board with it is cumbersome and awkward, and doesn't scale very well. And it generally pushes you to use a second organization to then make those payments for you if you're a small business, which has costs.
Of course. Simone, I know that you guys are extremely big on killing the hidden fees associated with card payments. And I wonder if you might want to sort of share with the audience how the open banking fees compare to the incumbents.
Yes, thank you, Ryan, for shout out and for supporting our mission to kill the hidden fees on the internet. It's a very sensitive topic that we have at the core of our culture at Volume. We believe that money should move freely on the internet. And if we look at the angle of the fees, back in the days, there was a reason why there were these fees. So the fee that the business is paying is to protect, to create a balance between the business and the consumer. So the consumer is entitled to initiate a chargeback in case something goes wrong when buying something on the internet. So those fees originally were there as a trade-off between the consumers and the businesses. But in a world where there are accessible reviews from the business, where we have visibility on past experiences, on the reliability of these businesses, these fees are kind of reducing the value that they're bringing to the table. That's our view. And particularly what we do at Volume is, of course, helping businesses to reduce the fees associated with cards, credit and debit cards. And on top of that, we give the possibility to the user to actually pay less. So if you decided to pay with open banking and pay directly via your bank app, instead of paying, I don't know, £100 for your latest Amazon or any other e-commerce order, and you get it for 99.5. So the user opt out to certain rights, and in exchange of it, it gets discount and it doesn't pay the hidden fees. And the last data that I'm going to leave with is when I ask how much chargebacks people have initiated in the next 3 days, the number, it goes between 0, 1, or 2. And we need to compare this of, okay, what if I tell you that you could actually save 1 or 2% in each of these purchases? would you still pay with card, or would you pay a bit less and opt out for some rights? I think that's the next big wave of disruption in the space is going to come from.
Amazing. Thank you so much for sharing that. So I guess like so far touched upon problems around speed, around fees associated with traditional payment methods, and around how to reduce risk around human error from manual entry. I wonder if also it might be good to explore the security angle. And I mean, I think Tom, you guys have a great use case with your accountancy businesses around how to avoid things like sharing bank logins. I mean, it would be great to touch upon that.
Yeah, absolutely. So traditionally, if you're a business that wants to outsource your payment activity or your payment process, that generally means adding your accountant or bookkeeper to your bank. Not only is that quite a process, but what ends up happening is that accountant or bookkeeper has a drawer full of cards and some sort of, hopefully not written down list of, usernames and passwords for all of their customers' accounts. And it means that accountant bookkeeper is taking on some sort of responsibility or liability. Often customers won't want to have dual authentication set up as well, which is equally problematic, because when the accountant clicks pay, they have expectation someone else might be approving that, but often the money just goes. What we set up is a way, what you can do with open banking is remove all the manual labor around setting up those payment runs. So someone else, like your accountant or bookkeeper or a team member, could set up payment runs, then have the person that has bank access actually execute them. And sharing in that way has never been possible before.
Amazing. Thank you for sharing that. I know that equally there's a great angle with payment security and e-commerce, particularly how much merchants and the cards networks have struggled with SCA. Simone, I wonder if you give the audience a flavour of how the authentication processes work with volume and with a one-click checkout experience that you guys are providing.
Yeah, no, that's of course something that is at the core of our user experience. We have seen many merchants struggling with a strong customer authentication, and specifically with the stability of 3D Secure. So the two-factor authentication enabled during card transaction. We know it's a new technology, relatively new still. But of course, either we fix the traditional credit and debit card infrastructure, or we leverage the new infrastructure. And the choice, of course, that we made at Volume is to use the new infrastructure enabled by open banking, and specifically by variable recurring payments that we will talk later. So of course, using biometrics and using directly the bank app installed in the phone of the consumer, it gives not only a higher level of security, but also a higher level of trust from consumer.
Cool.
Yeah.
Tom, after you, Tom.
Yeah, so authentication is one of those big aspects of open banking. So the first thing is that open banking uses bank level security, and that's both a great thing, but it's also, I do have my issues with some of the login systems that banks use. One of the reasons that Comma focused on bulk payments was actually to allow the user to do one authentication for multiple payments, because authentication methods in some cases were awkward if you were going to do 20 payments with one by one. I would definitely like to see, if there are any banks on the call, I'd like to see more widely adopted uses of Face ID or biometric ID built into the browser. Biometric ID is built into Chrome right now, so you can authenticate using some of these standard methods rather than making the user enter character 7 and character 26 of their passwords whenever they log in. So I think that there is some work to do there as we move forward, but certainly the use of Face ID and Touch ID on phones has been a big plus, and that's really enabled the adoption of open banking on mobile in a big way.
Completely agree. I think you know, in 2023, biometric auth is definitely available to all account providers in the open banking space, and the more we can sort of drive up the adoption of those, you know, underlying technologies, the better place that the ecosystem will be in. That's a nice segue, actually, Tom, just to discuss the specifics around bulk payments and, you know, how your product uses bulk payments. I guess, like, for the audience and for anyone on the call who's new to open banking payments generally, you have a regulated third-party provider, typically somebody like a Volume or a Comma who has authorization to initiate a payment directly from a consumer's account. So it's a push payment, but it always, you know, involves customer consent. And you know, then you have TSP, technical service provider, often sitting in the middle, like Yapily, who's there to manage access and to manage the network. But those are the sort of I guess the basics of open banking payments. Tom, would you care to sort of divulge around, like, how does open banking bulk payments work, and how does it work in the Comma product?
Sure. So I'll talk about just the APIs in general, and then sort of what Comma puts on top of that. So the use case for bulk payments is, you know, not often what people think. You know, most of the people that make payments through Comma right now might be making 5 payments or 10 payments or even 2 payments. And the reason we do use those bulk APIs rather than single APIs is that anytime you really have more than 1 payment, even if it's 2, the process of authenticating each one often is more painful than going into the bank to do it manually. So in order to eliminate that manual intervention, so you can get data from an accounting system or payroll system straight to your bank, we developed a system which enables customers to have one authentication to authenticate a list of payments, which opens up a load of use cases, mainly for accounts payable, and which is, you know, just about infinite in terms of how many cases there are around that, and also payroll payments, which yeah, have, you know, there's so many people right now who are entering in payments manually around that case. So the layer that we put on top of that API is really around making sure that it is absolutely free of errors, and that the user can use any bank they like, regardless of what logic that bank applies. Because many banks, or most banks, actually apply limitations around how many payments you can make, what sort of payments you can make. We help the user automatically navigate that by batching and grouping payments, and then providing all sorts of error checking mechanisms, so the customer can be sure that payments have left, they've gone to the right people, and provide them all the help they need to be able to enable those features in their bank. And that we then connect that to software systems, so that those software companies can enable pay features to be able to make mass payments straight from within their system, which is what we see as a key in removing friction.
Yeah, thank you so much for sharing that. I think it's an oft underused aspect of the open banking standards, bulk payments. Just, I guess, something that's a really hot topic for 2023, and is something that the consumer and business awareness of is growing, is of course variable recurring payments. Simone, I wonder if you wouldn't mind touching upon, at a high level, how does a variable recurring payment work in the open banking space, and like how can it enable the kind of one-click checkout that your product supports?
Yes, no, thanks, Ryan. That's a good question to explore. I'm sure most of our audience is familiar, but for those who don't know, like, the difference between a single immediate payment part of the open banking framework and variable recurring payment is that with single immediate payment, of course, the user need to authenticate all the time each transaction. And for this reason, most of the adoption that we have seen today for businesses are businesses that sell single immediate transaction. So everything that is not recurring. Contrary variable recurring payment, after the user give the consent, then there is a consent that can be used for multiple purchase, multiple transaction, within obviously certain limit and within certain range of transaction amount. And we of course leverage variable recurring payment to build a one-click checkout solution. The other component where the one-click experience for user comes along is our proprietary technology to identify the favorite bank of the user. So once the user has authenticate once through a specific business, for all the subsequent purchases, there is no need for the user to be redirected to his or her or like bank app, which of course makes the experience one click, super smooth and super easy.
Amazing. Just in terms of the adoption, Simone, how have you found the challenge of getting the banks on board with commercial VRP?
Well, that's a good question. Some of the banks that are I've seen an opportunity before others, and we have seen this being beneficial for a variety of reasons. The first is actually from a commercial perspective. It's a huge amount of extra revenue for the banks. That's the feedback that we received, because obviously there is no the traditional card scheme, without mentioning in the middle, taking a revenue share. But the other interesting angle is that it's a tool for increasing their net margin from a commercial perspective, especially in light of the massive adoption of Apple Pay, that is cannibalizing slowly the revenue that the bank actually generate from card transaction.
Amazing. We are going to just quickly do our first poll of the session. So just for any audience members, the question is, what's your biggest pain point as a business when it comes to payments in 2023? So hopefully the conversation of the last half hour hasn't been too leading, but I'll give people a couple minutes or so to to get your answers in, and then hopefully we can digest some of the responses. Cool, I've had almost a minute. Just going to give people very slightly longer. It's pretty fascinating to watch the percentage stats change in live. Just a gentle reminder to anyone who's clicked other, if you could list the specifics in the comments, that would be amazing. Great. It's great intel for us. Brill. Okay, so I'm going to close the poll and just share the results. So as we can see, the two main ones, and I think the two that have been a really strong focus of this session have been around bad user experience and of course costs. So costs associated with things like the card scheme or existing backs, and then of course user experience, manual entry, opportunities to further automate, access to biometric authentication and SCA. So thank you all for sharing that with us. We've got a little bit of time left. So what we wanted to spend just the final part of the session on was really just like top tips and industry predictions for 2023. So I think I'll go to Tom first. Tom, from your perspective, what's your view on how, I guess, as an industry and as an ecosystem, open banking can help drive forward user adoption to the greatest extent this year?
Sure. So I think there's been a lot of work in the last couple of years on really just making it work. In the early days of open banking, it was just hard to actually get the banks to function properly. And I think the last 2 years have really had that settle in a fairly nice way. And most of the banks now have greatly reduced error rates. We've been measuring this over the last 2 years, and it has greatly reduced. I think the future, there's a couple of things which I think will really drive things forward. There's some regulatory things that we'd like to see changed. One of them is the need for essentially double due diligence of merchants and also of, in our case, of people paying out. Currently, open banking payments is really enabling users to automate their own bank account. Yet at certain points, there's a requirement by the FCA regulation in order to do KYC all over again, which the banks have already done, and track payments in addition to the bank's tracking payments, which just seems like a whole load of duplicated effort, and it does slow down the adoption of these sort of services. I'm not saying get rid of regulation, but there are some certain things which we think need to be streamlined. Secondly, we really want to see that, in our case in particular, more software companies should start to enable pay features. Having kind of separate, well, we have an app ourselves. Even having that separate app is a point of friction. And we see that embedding these sort of services inside other pieces of software, which is used by millions of businesses, or websites that are used by millions of businesses, is the way forward to reduce that friction. Because most small companies just want to get on with it. They just want to move as fast as possible, and any kind of little thing that gets in the way leads to manual process, which leads to fraud, which leads to, in the end, slower movement of money. And I saw that in the poll. A lot of people were talking about late payments. Often late payments aren't due to anything evil. It's actually just due to the process around making those payments in the first place. So streamline that process of making it as frictionless as possible for customers and businesses and users is the way forward.
So you're kind of talking about software products like Comma almost becoming embedded within the services of other larger providers that a business might typically use. Is that?
Yeah, so we see the world like where open banking is really the future of payments. It's a whole lot of interconnected APIs, a whole lot of software systems connecting together. And we see that needs to go almost one step further to see that lots of the software that companies are using right now, websites, whether it's GovUK or whether it's an accounting system, should have these pay features in them so that they can enable very fast payments to all of their suppliers and employees. And because right now we have this incredible world where someone sends a PDF invoice from one business to another, someone has to copy and paste bank details off the bottom of that invoice and into their bank somehow and then manually pay it. It's we're living in this really antiquated system that should really be streamlined, and that will help speed up the movement of money. And it really is about connecting these systems together and having data move seamlessly from one point to another so that people can get paid.
Makes complete sense. I mean, I guess open banking in itself sort of opens up a new world of potential interoperability between account providers, third parties like yourselves. But yeah, I guess the step almost towards embedded finance and open finance indeed can help to almost join up the dots in that sense.
Yeah, and increase standardization is the other thing that would be good.
For sure, I think we can all get on board with that. So any sort of thoughts and predictions from your side on where you see things going in 2023 and how as an industry we can boost adoption?
100%. Two angles that we are betting on. The first one is obviously related to consumer adoption of open banking. I think we briefly mentioned earlier today, but despite the number of transaction processed so far is a good start, is nowhere near the adoption, of course, traditional credit and debit cards. So 2023, our bet is that there is going to be exponential growth in terms of consumers' adoption of open banking, because that's the missing bit to completely rethink the ecosystem. And the second prediction is on the bank side. More and more banks are exploring with more compelling and long-term strategies the adoption of variable recurring payments as a new way to generate revenues and to offer more services. I think these two are the primarily two predictions. If we're brave, we can add a third about the adoption from subscription businesses of variable recurring payments under the open banking framework, obviously, which is still a huge unexplored area that is up for disruption.
My prediction, by the way, is that the banks with the best APIs will win. And it won't be about anything else. It'll be about how well that bank connects into other systems, and that's going to be the future.
Couldn't agree more. And I think on that point, I think Simone touched on regulation. You know, for Yapily, I mean, the FCA really is like the European leader in enforcement and also innovation in terms of open banking regs. And I think our hope is certainly that other NCAs within Europe take note of that and take steer from the FCA. I'd be letting you guys off very lightly if I didn't throw it out to a few audience questions to finish. So there's been a few come through. I think this is a good one for Tom. So the question is, it seems many smaller businesses will use a service provider for their salary processing. Do they benefit in any way if the rails are switched to open banking?
Yeah, well, mainly it's a lot faster, and you can run payroll later. You can run payroll right up before you need to pay it, and in essence, you can also use a smaller accounting firm who knows all the rules around payroll but doesn't actually execute the payments. So there's lots of benefits in that regard. Speed, execution. You can in-house payroll or use a payroll provider, which isn't necessarily a back bureau. It could be your accountant or bookkeeper. In fact, there is actually a big move by several payroll software companies to target businesses directly to enable in-house payroll, and I think that's just a really interesting movement.
Well, thank you so much. I think this is a good one for Simone. So open banking seems to have taken off in the UK, and businesses are seeing benefits. But what potential do you see for internationally operating or scaling companies outside of the UK?
It's a good question. Historically, for businesses that wanted to enter Europe, they had to support at the checkout what they're called the local payment methods. For instance, players like Software in Germany, Ideal in Netherlands, My Bank in Italy, and so on, which means that you need to build a lot of integration, you need to write a lot of commercial agreement. So we have seen a lot of businesses that based in the UK that want to expand in Europe using open banking, and specifically our solution to cover an entire continent, like more than one countries with a single payment method. So essentially, it's a faster go-to-market strategy and a faster way to expand into new countries. That's probably the biggest opportunity that we've seen cross-border at the moment.
Thank you so much. A lot of questions coming in on VRP. You'll be pleased to hear. So I think this is a really good one, and a little bit more of a, dare I say, technical one. For the newcomers to this topic, can you describe what are the unique benefits to variable recurring payments versus direct debits?
So I generally
probably, but
okay, I'll make an example. Like you can go from place A to B with a traditional car, okay, with a Fiat 500, or you can go from A to B with a Ferrari. It's not about what is broken in one side and what is not broken on the other. At the core of the experience and the difference, both works. I would lie if it say that it doesn't work, but for businesses that want to offer a premium user experience, specifically businesses that are in the e-commerce, these guys have dedicated team to increase conversion rate at the checkout. Variable recurring payment is the obvious next step. So we don't say direct debit is broken. We say, no, direct debit works for some use cases, but there are some other use cases where VRP offer a much better UX.
It's a settlement time, right? So, with VRP, you enable the real-time use case. With direct debit, you have to wait 3 days before you can know whether the payments actually got there, and people can cancel them. So it's quite hard to use for e-commerce. And that's why things like Klarna exist, because, well, you can pay your Klarna bill by direct debit, but they're taking the risk that of chasing that money down later. Whereas, so for the merchant, VRP is a real-time way to know they've got the money, then they can actually deploy, send you the goods.
I think Simone might have touched on it, but I would just.
Variable recurring bulk, by the way.
Sorry, Tom.
That's in the future.
For sure. I think Simone touched on it a bit, but I would just add, I guess, like the flexibility of a variable recurring payment mandate versus direct debit. I mean, it is, to Simone's analogy about the Fiat 500 and a Ferrari, it really is night and day in terms of the amount of things that a customer, has the ability to control. And that brings a lot of benefits for the relationship with the merchant, for the relationship with the bank, and I think it will only drive a more positive experience for recurring payment use cases. So thank you to whoever posted that question. I think we are almost out of time. I'm just gonna sneak in one last question, and I'll throw it out to whichever of you feels keenest to take it. What is the most significant OB payments use case for banks from a benefits perspective? And I think that means, what are the benefits for banks?
Well, I could take this. So I touched on it just before, but the benefit for the bank is really staying that place where businesses and consumers hold their money, and those businesses and consumers want to move money from where their money is. They want that interaction with their bank. I think that's the biggest benefit of open banking, is that the bank can enable those customers to really make use of their money in a much smarter and efficient way, and also reduce a ton of risk in the process, because risk and fraud comes from manual interventions in the process, and remove those, and you can reduce a lot of that problem.
Thank you so much. I'm afraid we have run out of time, so I'll just close by saying thank you so much to everyone who joined. Huge thank you to Simone and to Tom for volunteering your time for this. The life of a fintech founder, I'm sure, is an extremely busy one. So thank you for giving up an hour of your afternoon. And on behalf of Yapily, just great to have so many people on, and we'll get in touch following this. Also, if you want to speak to either Tom or Simone directly, please just post your details in the Q&A in the chat, and we'll make sure that we can set something up following on from this. So thank you very much, and have a great rest of your day. Cheers.
Thank you, Ryan.
Thank you, Ryan.
No problem.